Good morning. It's Friday, the 7th of June, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. And what a week it's been. But let me start with a little stock story. Stock prices of Heritage Foods and Amara Raja Energy have rallied up to 32% over the last 2 days, following Andhra Pradesh's Telugu Desam Party or TDP winning in local legislative assembly elections, as well as becoming a key player in the formation of the new government as they are allies of the BJP. Now, what a double-engine win, one might say, to use a term that's often been used in the last few years. Now, Amara Raja is a profitable company. Its automotive batteries or the brand Amaron are quite well known, and the company is also into energy storage solutions, lithium-ion cell manufacturing, and so on. Heritage Foods, on the other hand, is a branded dairy product company and also makes cattle feed. Both stock prices have done well over time. But now, a fresh surge in the stock is attributed to the political connections between both companies and the TDP. Amara Raja's managing director Jaidev Galla was a former member of parliament from the party, while Heritage Foods has been promoted by Chandrababu Naidu's son. But stocks of both companies are in the news not because of their inherent strengths, if any, or which must be, but because of their political connections past and present. Now, I'm reckoning that a very large car maker in India who pre-installs Amaron batteries versus, let's say, Exide, does so because it trusts the product and does not think of who knows who in the company and in the government. Because the car company has, of course, to think of its own consumers as well. Now, this is an unfortunate trap for companies who might be doing business normally but are not seen as such. But the problem is also with those who create this perception. For example, the Modi stocks, or stocks that will or could do well because of either their perceived affinity to the administration or the fact that the government was investing heavily in infrastructure, which in turn would benefit these companies, or maybe they were just state-owned enterprises or public sector units. Well-known brokerage CLSA, for example, as I've been saying, came up with Modi stocks. Now, CLSA, incidentally, is a Hong Kong-based brokerage that was acquired by Chinese investment bank CITIC Securities about 11 years ago. None of that matters really here. But the point that's distressing to note is that stock prices are so visibly predicated on political connections almost 30 years into liberalization. All I can say is that this is not something that long-term investors should bet on or even think of. In the short term, all kinds of investors will determine stock price behavior, and there's nothing that you and I can do about it. And there's nothing to say that either those investors or stock prices will be rational in that process of stock selection or stock price movement. But even in businesses that have a high political factor, as in infrastructure or natural resources, investors must be careful of companies whose success is limited to managing deals. Now, all of this is stating the very obvious. But there are stocks in the market, and thankfully so, that are not dependent on political connections and links. All I would say is bet on them. And now the top stories. The stock markets regain more ground and are set to stabilize further. Oil prices edge up after Saudi minister says might hold back on supply increases. Sharp spikes in prices of tomato, potato, and onions push up food costs once again. And the demand for liquefied natural gas or LNG is spiking as more gas-based power plants start firing up to meet power shortages in India.
This is the Core Report with Govindraj Ethiraj.
The markets recover, set to stabilize further. So the stock markets were placated further yesterday, that's Thursday, June 6th, after seeing a clear third term for Narendra Modi. The BSE Sensex closed about 75,075 points, or up 692 points, while the Nifty 50 closed up 200 points at 22,821. Both were up about 0.9%. Now, the markets were volatile, but in positive territory, or were in positive territory, but volatile. It's quite likely that markets will remain volatile even if they edge back towards earlier peaks till the government settles down to business. In general, the next economic milestone is the union budget, which will be next month. Of course, much else could happen before that, and it will, of course, be interesting to see what the cabinet finally looks like and the roles for the alliance partners, that's the TDP and JD, along with the BJP, particularly in economic ministries, if so. In the broader markets, just to come back there, the BSE mid-caps was up 2.3% and the BSE small-cap index was up 3.3%. So somewhere in the middle of the market, things are moving quite fast. The other market that's been moving fast is Wall Street. The S&P 500 rose to a record. It's 25th this year after Nvidia crossed the $3 trillion barrier for the first time, and softer than expected jobs data raised hopes for an interest rate cut, according to CNBC. The Nasdaq Composite also set a record, climbing almost 2%, with technology stocks Hewlett Packard Enterprises and CrowdStrike soaring on better than expected sales and earnings. Apple rose for the 89th day on Wednesday, the longest run since March 2022. The Dow Jones Industrial Average was a little slower and lagging. So the latest pecking order is Microsoft, Nvidia, and then Apple. Nvidia shares, by the way, have risen about 24% since its big earnings report in May, while Apple shares are up only about 5% this year, thanks to its sales growth stalling in recent months, according to CNBC. Back to Indian markets, now that markets have settled or seemingly settled after wild gyrations that we saw this week between Monday and Thursday, where could we be headed next? I reached out to veteran market analyst Ambareesh Baliga, and I began by asking him how he was seeing the present and near future. And the key question, are the markets at a turning point of sorts?
I mean, if you're talking of short to medium term, yes, I think we are at a turning point. A turning point in the sense we should be turning down and we should see further correction. Although, as of now, as we speak, we are seeing a decent bounce back from the lower levels. But I don't know as to how long this bounce back will last. Because first, I mean, there was a shocker as far as the actual election results are concerned, because of which we saw the market correct. And then we have seen that NDA government would be formed with support from allies. And since the date of 8th of June has been finalized for the Prime Minister's swearing in, I think this rally is basically because of that. But the question still remains that I mean, a government which is much weaker than what we have seen in the last two avatars, whether the growth story of India will continue at the same pace or not, I don't think anyone is really questioning whether India will grow or not. I mean, that's taken for granted. The question is whether the pace of growth or the velocity of growth will be similar. Would the focus of the government still remain in all the sectors where, I mean, there was a huge focus, defense, railways, whether that sort of a focus will continue in the near future or not? I think all these are the questions because of which we've seen a decent correction in those segments.
But Amrish, these are the segments where most market participants have also said that there is froth, like defense and railways. So wasn't that correction a good thing then?
No, but the correction is a very good thing out there because there was huge amount of fraud created there. But since it was money chasing those stocks, it was quite difficult to justify and convince people that the valuations are expensive. Because every time you try and explain to people that the valuations are expensive, I mean, these stocks double. As a fundamental analyst, you look like a fool. But then somewhere, I mean, we all know, I mean, being in the market for this for such a long time, you all know that at some point of time, valuations come into play. And this is the time when the actual valuation would come into play. Because you had stocks which were quoting at less than 1x revenue. Well, they are quoting at 15x revenue today. I mean, you have a HAL quoting at half the value of Lockheed. I mean, how do you justify it? But yes, when money is chasing stocks, you can justify anything.
Right. And that also brings me to the other question, which is how much money is likely to continue chasing stocks, and more specifically, the fund flow that we've been seeing through systematic investment plans and retail investors. Could it continue the same way we've seen in the last few years?
I think that will be the interesting data point to watch out for. And that I think we'll know possibly in the next, 3 weeks to a month, or maybe the next 2 months, we should have a clear idea. Because always in the past, we used to say that SIPs is lazy money. I mean, when you start an SIP, I mean, you don't even bother to stop it. Yeah. And it just carries on. But those were the days when you had to go to your bank, you had to go to your investment manager or go to the mutual fund, sign off a couple of papers to stop the SIP. Today, you can stop an SIP with a click of a button on your mobile phone. So, in the current scenario, even if a retail investor is losing huge money, in case he feels that markets may not be the right place to invest right now, he can just pull out any time. So I think over the next couple of weeks, we should know whether the SIP numbers are continue to be robust like what you've seen in the past, or they start seeing a dip. Because in the last couple of months, clearly, I mean, SIPs were continuing, but lump sum investments have started reducing. So that can be now in SIPs too.
Right. And if we can do a small post-mortem of trading on the 4th of June, where the market fell almost 8% and then 6% finally, would a lot of people have lost money? And if so, couldn't they have or would they have recovered it in the subsequent days, which is on Thursday and Wednesday?
Totally depends on how you reacted when the markets fell close to about 2,000 points on the 4th of June. Yeah. I mean, you've not seen that sort of a fall since you started investing, because I'm assuming most of these investors, I think majority of the investors in the market today are having in the market for the last 3-4 years post-COVID. So surely they've not seen a 2,000 point sort of a fall in a day. So if you're panicked and sold off, I don't think anyone would have guts to buy back. I mean, that's the normal investor psychology. When you're sold off, you'll never buy back at a higher level. And those who have possibly held on would have surely recovered a decent part of what they lost. Decent part in the sense that I would say possibly invested in defense and railways. You would have at least recovered part of what you lost in that one day. But then again, the psychology works this way. I've seen a fall like that. Now the market has bounced back. It's given me an opportunity. Let me book my profits. So I think that's sort of a scenario we could see over the next few days, because of which I say that this is a decent bounce back. Whether it's the beginning of next rally, may not be. And we could see selling coming in at higher levels.
Right. Given all of this, how are you looking at the markets in terms of themes that you feel are more consistent and, let's say, provide more opportunity?
I think the defensive bets will again come to play, because looking at the constitution of the government right now, I think the focus would be more on the rural and the bottom of the pyramid. There could be some populist measures which could come, which will mean more money in the hand of the bottom of the pyramid and rural. So the consumption themes, I think, should play out decently well, because of which we've already seen FMCG stocks bouncing back well. So it could be FMCG. IT is one space, although it's not linked to consumption, but then it's expected that at least the order flows should resume, because I mean, this year we are seeing some 60 plus elections across the globe. So post that, expecting visibility for each of those countries and locations or geographies. So because of which, going ahead, I think the order flows as far as IT is concerned should be better. And we have seen close to about 24 to 30 months of a downside in IT. So at these levels, this sector seems recently well bottomed out.
Right, Ambareesh, thank you so much for joining me.
Thank you. Thank you.
Oil prices edge up. Oil prices rose for a second day after a Saudi energy minister warned that the Organization of Petroleum Exporting Countries Plus, or OPEC Plus, planned production increases could be reversed, according to Bloomberg. The prospect of production increases and thus more supply of oil, which we discussed earlier this week, obviously brought prices down and now seems to be headed the other direction, at least for right now. However, Brent crude is still holding around $78 a barrel, just below $79 a barrel. Vegetable prices continue to rise. Costlier vegetables, and I'll come to that, made your vegetable thali dearer by about 9% to about 28 rupees in May, up from about 25 rupees the same month last year, according to rating agency CRISIL, which puts this out every month. A vegetarian thali has rotis, onions, tomatoes, potatoes, rice, dal, curd, and salad. A non-vegetarian thali, whose prices are down, has the same foods, but chicken, that's broiler, replaces dal or pulses. The average cost of a home-cooked thali is calculated based on input prices in the north, south, east, and west of India, according to CRISIL. The cost of a vegetable thali increased because of a jump in prices of tomatoes by 39%, potatoes by 41%, and onions by 43% year on year. So it's almost half more than what you paid last year. Though CRISIL says that this is also because of a low base in the last fiscal in its monthly roti rice rate report. The prices of rice and pulses also increased by 13 and 21%. Interestingly, a further increase in the price of a vegetarian thali was prevented by the fall in prices of cumin, chili, and vegetable oil, which fell 37%. That's cumin, chili, that's 25%, and 8% in oil. Else, the prices would have gone up further. Vegetable oil prices, of course, have stayed soft or falling, as we've been pointing out on the core report in recent weeks and months. Compared to April, the cost of a veg thali was only up about 1%, And prices of a non-veg thali, which is broiler, like we said, is now at about 56 rupees against about 60 rupees in May 2023. The core report has been speaking to representatives of the broiler industry who've been pointing out that supply has been steady, and while they had been anticipating some impact of heat waves, that does not seem to have happened, at least in the last month. The rains are advancing. The southwest monsoon has reached Maharashtra on Thursday, bringing respite to the state where many parts have been reeling under scorching heat and severe water shortages, according to the Business Standard. The Indian Meteorological Department said the monsoon had reached the Sindhudurg district in South Konkan, that's on the coast, and Sangli and Kolhapur in western Maharashtra. It's likely to reach Mumbai between June 9th and 10th, where we are, and we'll obviously be welcoming it. Several parts of Maharashtra have been witnessing severe water shortages with high temperatures making it worse. As of Thursday, according to official data, 11,500 villages and hamlets in 34 districts were being provided water through government and private tankers, according to Business Standard. Gas-based power plants are firing on all cylinders. Heat waves and a hard focus on ensuring continuous power supply is fueling a surge of gas-fired power in India. Now, this in turn is leading to forecasts that imports of liquefied natural gas, or LNG, will rise sharply in the next 2 years, according to Reuters. India's gas-fired power generation doubled in April and May to about 9 billion kilowatt hours compared to the same period last year, according to data from Grid India. And this also ate into the share of coal-fueled electricity for the first time since COVID-19, said Reuters. So more than 75% of India's power generation was from coal last year, while gas was only about 2%, but that has now obviously increased. The government had earlier armed itself with an emergency clause invoked to force operation of idle gas-fired power plants to avoid power cuts during the 43-day general elections that ended on June 1st. Now, all of this means that gas-based power plants are not running on regular days or time. So why is that the case, and what's driving the surges in demand, and where will that additional gas come from? To understand all of this, I reached out to Viktor Vanya, director and co-founder of energy analytics company EMA Solutions, and I began by asking him to give us a context of gas-based power against overall power demand in India right now, and where or how prices were moving.
Usually we have high demand, but this time we have more demand because there is minimal load shedding across the country due to elections. And usually summer's demand is high, as we observe, usually during the night hours. Night hours, we have a lot of AC load. And due to the special season, which is elections, we see that the demand has touched the record levels, around 50 gigawatts. But this is an annual cycle, but it is exceptional because of elections this year.
Right. And what is the proportion of gas-based power plants in this, and how has that been rising?
Right now, we have around 9 to 10 gigawatt of supply. Out of the total supply, we have around, we're having a demand of 50 gigawatts. So our supply is running to 50 gigawatt. Out of that, around 10 gigawatt is coming from gas-based plants. Usually, if you look at last year or previous years, it is around 4 to 7 gigawatt. Now we have more excess capacity because we're using costly gas generation this year, especially because of elections. Otherwise, since the cost is very high of such plants, around 25 to 35 rupees, usually we don't prefer to run those generators even in the peak summer because they are exceptionally costly. This being an election year, we choose to use those generators.
So these plants, if you're saying that currently we are at 10 gigawatt, which means that we have capacity of 10 gigawatt, versus, let's say, the normal generation of 4 to 7 gigawatt. So why did we invest in these plants if the cost was going to be high, or were prices not high when we invested in them?
While back, considering that we have a lot of KG gas coming in and then a lot of plants.
That's the Krishna Godavari gas?
Yeah. Cheaper domestic gas, but that didn't happen. And then a lot of stranded capacities we still have. And now whenever some crisis flood, we import LNG and then use them.
So in this, how much is the domestic LNG and how much is imported right now?
From our assessment, almost 30 to 40% of it is imported. Rest everything is domestic. And most of these costlier plants, which are running about 20 rupees to 35 rupees, those are all run on imported LNG.
Can you explain the pricing a little more, Victor? When you say 25 to 30 rupees, I mean, how does that break down?
Yeah, because see, gas generators, mostly the cost is the fuel cost. When we are importing LNG, and you know the IGX prices also based on the international market prices, and even we have domestic IGX gas prices. So based on that, there is a conversion factor for gas considering the calorific value, and there's a direct correlation between the gas prices and the electricity prices when you're running it. And it's like a diesel plant at home, diesel generator. We put in diesel, the diesel cost increases, our per unit cost also increases. The same fundamental applies here also. So we instead of domestic gas, we are bringing in imported LNG, which is very costly. Otherwise, domestic gas plants run between being 10 rupees or 10 to 12 rupees in that range, most of the time.
So we're paying about 2.5 times right now, you're saying, if not 3 times. And what does this mean in terms of the per unit cost that these plants are incurring? That's the first question. And second is, how are they making up for it?
So if you look at the total generation as such, gas generation is only 3%, at best 4 to 5% when we're running in peak night hours. So this 3-4% out of this also you can say that 50% to 60% of it is domestic gas based generation. And we have LNG, it's very minimal. Maybe you can say 1% of total generation is coming from imported LNG. So that's very small portion, and that too we run only in the summer season. As such, if you look at our overall generation of power cost, it doesn't matter when we run for a few months, 2-3 months, and that to 1% of generation at 25 to 35 rupees. And it doesn't dent our cost, or finally the consumer is not impacted much in such a scenario.
So what's your outlook, Victor, as you look ahead? I mean, do you see gas-based power plants, working harder, or India producing more power through gas-based power plants? Or is this something that will always be like a backup?
No, actually, if you look at overall scenario, we are in a unique situation right now in India. The reason being we're adding more and more solar, which only produces during the day hours. And then, when the light goes out, your generation passed. And due to that crisis, we need some generators which can ramp up fast. But when solar is going down, we need some generation which can go up as fast as the solar is going down, so that we balance the thing. For that purpose, the alternative is you have hydro or gas generation. But hydro is limited in the country. We cannot add more hydro very fast. And the other option we have is whatever standard gas generators, excess capacity we have, use them during crisis hours or when we are not able to manage by ourselves and the demand goes very fast, increases. So we only use gas generation in the crisis hours, and that too, given that we are adding more and more solar, the demand for gas will increase. But as and when we come up with more hydro generation, we are adding more pump generation, and that's the crisis. And that's the priority of this government. In the next 3 years, 2 years, we'll have a lot of pump storage also coming in. Once pump storage coming in, the requirement of gas also will go down.
Right. Victor, thank you so much for joining me.
Thank you very much.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.